do good while doing well when it comes to investing. Today's show, we're going to talk about just that and how you can align your values with your investing strategy. Your relationship with money matters. I'm Michelle Perkins, and this is the Money and You podcast, where I will be breaking down your relationship with money, offering tough love money tips, and a money dating plan that will focus on lifting the barriers to success to help pave the way for better money practices and increased wealth. It's time to take control to live a limit-free life. It starts today. Hello, hello. Welcome to the Money and You Show. I'm your host, Michelle Perkins. I have such a great guest today. Super excited to introduce you to Dale Wannen. Dale has a new book out called Don't Feed the Clowns, Sustainable Investing for Everyday Life. Veteran financial advisor Dale Wannen proves that it's indeed possible to make money while helping to save the earth and enjoy doing both. His humorous, jargon-free, easy-to-understand writing will keep readers intrigued and is sure to change more than a few minds. Dale Wannen has more than 20 years of experience in wealth management and financial services, and in 2013, he founded Sustainvest Asset Management, LLC, an investment advisory firm focusing on sustainable investing. Today, he advises his clients on ESG, sustainable investing, and shareholder advocacy, and runs seminars on these topics at schools and corporations. Welcome, Dale.
Thanks for having me, Michelle.
I'm so excited to have you here. We had an interesting discussion, and I love what you do. And I kind of can't wait to get into this because I think it relates so well to a discussion about your relationship with money, because I was thinking about it. And, you know, obviously we want our relationships to be in alignment with who we are. And so often I think part of the trouble we have with our money relationship is that, you know, we feel that to make money, we have to be some kind of person who's, you know, not so full of integrity or needs to do things to make money, like invest in companies they don't believe in order to become wealthy. So I love your different take that you're going to give everybody on this. I think it's a relationship switch that people should have.
Yeah, no doubt. Yeah. And people, I get the best thing apart. My job is like a month or two after somebody becomes a client. What's really cool is you'll get that like random text or call where people are like, I just feel like there's a weight off my shoulders because I don't look at this one company that I don't believe in what they're doing. I don't have to stare at my statement anymore. They're in there. So
yeah,
it's an exciting time to be in this business because a lot has changed in the last 5 to 10 years.
Yeah, that's fantastic. And I think what you do is fairly unique. Why would you say that is, that more people aren't, advising in the way you are?
Yeah, that's a good question. I don't know. You're starting to see it now, though. You are starting to see some of the big dogs come in because they want to be part of this business, and they're doing it because their clients, right? Their clients are asking them. They're sitting down over coffee and, somebody talked to somebody last night at a dinner party about ESG and what does that mean? And all of a sudden, the big companies are jumping in, but it's still got so much more room to grow. And so it's kind of exciting to see this movement, because 10 years ago or 15 years ago, which I think I've been doing SRI, or we'll get into, for like almost 20 years, it wasn't a dinner time conversation, but clearly it's happening.
Yeah. Great. Can you help us with the term ESG?
Yeah, this is the tough part of this business, is there's all these different acronyms that are thrown around, and I think I talk about this in the book. A lot of people it's too much. It's too many different fancy letters being thrown at me. So ESG is that's sort of the go-to right now. If you open up the Wall Street Journal, I bet you every day there's an article about ESG. So it just stands for the environment, social issues, and governance issues. And so that's the all-encompassing way to approach sustainable investing. And,
interesting.
I have friends who now, like ESG, they're chief sustainability officers at major tech companies, right? I went to grad school with them and things like that. So it's not just investing, but the big corporations, these chief sustainability officers are now sitting shoulder to shoulder with the CEO, because it's an important part of their business now.
Oh, very interesting. Okay.
Yeah.
Yeah, and I also love because again it goes along with having this better relationship with money. I really want people to enjoy dealing with their money, to enjoy managing it, to enjoy making it, to enjoy, kind of runs the gamut, because that just makes for a better relationship. And obviously that is going to help you to want to interact and to want to invest, to want to do, all the things with money and keep it as a part of your life. And I feel like what you're doing creates kind of, I mean, love might be too strong a word, but this nice relationship with your money that people often don't have. I mean,
Yeah, absolutely. It actually makes my job a little bit easier.
yeah,
And not that this job is easy, and I know you speak with a lot of finance folk on your podcast, but when somebody walks in the door here, or we go have coffee or something, there's almost like a barrier that's already broken between us because, hey, I do sustainable investing. Don't talk to me
yeah,
if that's something you don't want to do. And so definitely makes the conversation a little bit easier to start. Like, oh, can you take out gun manufacturers or whatever it is?
hmm,
But also remember that people want to make money. And I have very sustainable, organic, loving clients, but they have worked hard to save money. They're not doing it just because, hey, I feel good about buying
right.
organic or whatever it is. They're doing it also to make money. So, and we might get into that later on this chat, but
Yeah, I want
um,
to get into that because I do think
yeah.
that's one of the big obstacles is people think, well, I'm gonna be sacrificing a bit if I do this. Like I'll be
Mhm.
doing good, but my earnings will be a little less than if I didn't do good. So can you just speak to that?
Yeah, it's almost the exact opposite of that. And I get this. I just was down in Santa Barbara with a nonprofit client, all their executives, and you know, somebody asked that question. And this is a very sustainably minded, community-based organization. And somebody sort of said, it's just a shame that it doesn't perform as well. And I had to stop them. We weren't even looking at their performance. That's just on their mind.
Yeah.
And they were young, somebody in their 30s. Like I was like, wow. And you have to kind of, I wish I had a slide and not to pop up right now to show that that's not the case. Because what's happening is companies that are addressing ESG, Apple, Google, go down the line. They're kind of putting themselves out there ahead of the curve with
Mm,
companies that are like, yeah, we'll worry about that later. And I'm not going to point fingers today unless you really want me to. But there are certain companies that are sort of kicking this can down the road. And meanwhile, you look at Chipotle and compared to their
hmm.
competitors, there's a clear differentiator in how much money they're making and how well their stock's doing. So that is that's the old school mentality to think that, and it's sort of my calling in life to let people know that I
Mm,
always bring up Whole Foods, and
yeah.
not that I'm saying Whole Foods is great; they're owned by Amazon, but go into a parking lot at 5 p.m. at any Whole Foods, and
Hmm.
I don't know if this is apples to apples comparison, but it's a busy place because people feel connected to their food a little bit more, maybe as opposed to going to somewhere else that's not as hip to sustainability. So
Yeah. Yeah. Absolutely. Um, Okay, I love that, and I love that. Money is just the whole financial industry is fraught with so many myths and ideas that have been passed down or whatever. So, I love that some of the things that we just assume are not true, and I think it's great that you're able to pull that, to put that in order for people. I also love what you said about you finding your calling because love to talk about careers on this show as well. And so, can we go back a little? Were you doing this from the beginning? Did you do sort of regular financial advising before this? What's the progression here?
yeah, this is how much time you got? You got a good 3 or 4 hours? Couple have a grab, open up the bottle of bourbon.
Yeah.
No, so it goes back, and again, this is in the book, like hence the title of my book, which is "Don't Feed the Clowns," and maybe we'll touch on that later.
Oh
It's
yeah.
sort of a strange title to a book, but so yeah, absolutely. I graduated on the East Coast, a small college outside of Philadelphia many years ago, and just couldn't get a job. I had an economics degree, but I
Mm,
thought I was going to go to Wall Street.
mm,
Interviewed at a couple of those stock brokerage firms that we're talking the '90s, late '90s, which was really interesting there. And but I ended up working for an insurance company, like cold calling 25 people a day, selling long-term care insurance
Oh
and
my
life
gosh.
insurance.
That's what
And
I talk about all
I was a
day.
young whippersnapper,
Yeah.
but that's all I knew. And it was a great way to get into the business because it was probably the hardest way to get into the business. And this is before, this is when I don't even think we had cell phones. We may have just had those old Nokia phones, but
Uh-huh.
you would just be given a list of, hundreds of names each day and just start dialing. So, and then it kind of morphed. And to your point, as I come full circle, I worked for a few banks, which was a little bit easier than working for the insurance company. I worked for a few broker houses, and I was about to leave the industry. And I was again in my late 20s, and I was like, there's got to be a better calling. And I heard a wholesaler from a fund family called Calvert, which Calvert is one of the original sustainable fund families out there, and I'm not promoting them. But the point is, it kind of was like, wow, I think I can stay in this business and there's like a purpose behind it,
Hmm.
helping clients
Interesting.
find. So that was it. And then I became an independent, 10 years ago, I started the firm and, and there was a few other things between that, but definitely I went through the old school ringer. Like
Yeah.
it
Yeah.
was hard. It was
It is
a hard.
hard, and I'm glad you talked about it because I think people need to know that that's kind of how you've got to do these things to find out A, what you don't like, and B, what your
Yeah.
awareness just becomes so much sharper. And then when you hear something and you feel something, then you can be led by that. I think it's really important.
Yeah. And just being involved in sustainable investing for maybe 20 years around there, just to see the change. It's a great, and I think luck has a lot to do with it in any industry, like whether you're a podcaster or you're in organic food, but being in sustainable investing at this time when data is out there. And I
Hmm.
talk about all this. I keep referring to the book.
Yeah, we'll go to the book
It's one
next
thing, yeah, it's one thing to write a book. It's another thing to actually market it. It's a whole,
uh,
that's not my thing, but there's so much happening in this niche of sustainable investing that if there are people who want to get involved, you can always email me, but there's just, there's 4 or 5 different industries within sustainable investing that somebody could get
hmm.
into one of those 4 or 5 separate industries. So
Can you elaborate on that just a bit?
yeah, it's funny. I think you mentioned in the intro, which I'm not big on intros. I don't like people talking about me a lot but I speak at certain colleges and universities, and people will say, "Hey, I'm getting my undergrad or my graduate degree in finance, and how would you get into this business today?" And of course, I give my old man story. I'm in my 40s still, by the way, but I
Oh
refer to
gosh,
myself.
so
I,
young.
in the old days, you cold called and you had to grind, but now there's certain industries that are very interesting, like, well, first of all, ESG data aggregation.
Hmm.
As we enter this robotic world, which we will enter this world. We're probably already in it and don't even realize it, but such a big business, ESG data, and everybody wants it.
Hmm.
And if you're in that field, you may be able to do something in that. Then you can go to the flip side of that, which is really the social aspect, like impact investing.
Mm.
Be careful, that's 2 different things. But impact is like, hey, Dale, I really want to help a local community. I want to help invest in local organizations. Well, that's another avenue that you could come in that has nothing really to do with public stocks,
Hmm.
but it has more about like, hey, can we create a community node? Because advisors are actually looking for them. So those are 2 examples, and it goes on. I mean, activism is another thing that's near and dear to me, but
Hmm.
there's so many different interesting. It's no longer cold calling.
Yeah. Oh my gosh.
Yeah,
Just the mention of long-term care insurance just completely threw me for a loop as I try to deal with it for my parents. But and
yeah.
my brain just went down a whole
Well,
other
they
road.
they pushed us young whippersnappers back in the 90s. We became experts like nationally.
Yeah.
Just and not that that's a great. It's not like became a country singer. It was more like I knew everything about like LTC and assisted living facilities, and so you were the
Well,
insurance
I'm
companies.
going to be calling you to do another show. Let's
Yeah,
just
they
say
they
that.
love selling those. They're good products for the insurance companies, but yeah,
Yeah. We'll talk on that one.
yeah,
That really is a show people need to have.
yeah,
But I am going to go because I want to take this to your book because it sounds like your book provides a lot of the answers to questions people might have. Am I correct in that?
yeah. Like all within 200 pages, like my whole life story. and
Okay.
learning about everything in 200 pages. Yeah.
Well, speaking of your life story, you you did send me a few questions, and who can resist this question? So I don't usually ask provided questions so much, but can't stop myself. Did you really read the stock pages when you were in second and third grade while your mom smoked cigarettes next to you?
Absolutely. Yeah. That was the good old, what was that, the 80s? I was so absolutely. And that's just, sorry, mom, rest in peace, mom. But to mention that, but yeah, you remember the old like Formica kitchen tables.
Yep.
Like I grew up in New Jersey outside of Philly and everybody smoked. And sorry, we're not promoting, nor are we promoting investing. We don't invest in Altria or any other companies. My
Interesting.
clients don't. So we screen all that out now. But the point is, yeah, she would just sit there in the morning and we'd get the Sunday press and I would, for whatever reason, I'd kind of scan over the Garfield and the Peanuts and all that stuff, those old comics. And I just loved, and it was like I was looking at like McDonald's stock and like compact computers, which was out,
Oh, yeah.
and I would write on a piece of paper. I would literally, I think it was once a week, I would have a yellow line piece of paper and I would just write the price of McDonald's stock. And I think it was in second grade or something. But it was
Wow.
fun for me to look the next week. Remember, there was no internet or
Yeah.
anything.
Yeah.
And I would write down McDonald's was up $3. Well, what if I put a $5 into that? It was just, it became
Yeah.
this sort of mathematical thing for me. So I did. Yeah, that
That's
was the
very
Atlantic
cool.
City Press. I wasn't reading Wall Street Journal. I was reading the Atlantic City Sunday Press, but they had all the stock
That's
symbols.
interesting to me. I think it's also, when back to career choice, career coaches notoriously will tell you, well, go back to when you were young, what were you
Yeah.
interested in? So, and usually it's something completely different from what their career is, but in this case, it's not. So,
Yeah. You'll hear me refer to being a country singer because I think deep down inside that still is on the list. It's just
I love it.
the finance world kind of gobbled me up for the last 20 plus years. But
Yeah.
I do tell my wife, be ready because, you know, not 50 yet, but it's coming. And if I'm going to go country singing, I'm going to take that route. You've got to do it
Yeah.
sooner than
Well,
later.
invest well enough, right? And then you can have a
Yeah.
whole, many
Yeah.
lives.
Anyway.
So, so tell us a little more, ESG, sustainable investing, and impact investing. So, you want to tell us a little more about how
Sure.
those are different, really? Because they
Yeah,
sound
real
kind of,
quick. And again, it's not rocket science. So sustainable SRI is really the go-to acronym, sustainable and responsible investing.
okay.
So now you guys, if you go to cocktail parties, if you say SRI, you'll sound like you know what you're talking about. But that's sort of that's the high ranking acronym. And underneath SRI, ESG is a component. And ESG is really just the screening. If a client comes to me and says, "Hey, man, we should really be overweight the healthcare sector," do you know 3 to 5 names that rank really high with ESG? It could be the environment, it could be within the healthcare sector. Well, the data is out there. It's so easy for me now to weed out the bad performing ESG
Hmm.
stocks.
Mm-hmm.
And we're also looking at finances. Remember, this isn't just 100%. Oh, that's a good sustainable
Right.
company. But you also have to look at valuations and et cetera, et cetera. And then there's impact, which is these are all components that fall under SRI. Impact is the more community related, which is actually really popular now with a lot of my clients who are like, hey, we've made all this money, blah, blah, blah. Can we take a small percentage, of $3 million or of 800,000? Can we take a percentage of that and really try to, even if we're going to make 1 to 3%, can we put it in some sort of local community note that we know it sort of goes around the publicly traded companies and it goes
Mm-hmm.
directly to those organizations. So
Hmm.
that's considered impact investing.
Is there
Um,
is there any donation component to that, like from a tax perspective, or
there's
no?
not. So
Okay.
you're already speaking the game of SRI. So some clients will say, hey, I really need a tax deduction. And I tell them, of course you can set up a donor advised fund or you can set up a foundation to do all that, or you can just give that nonprofit your money directly. That's the most, by the way, and I don't think I mentioned this in the book, but the most impactful investment is a tax deductible donation to a
Yeah.
nonprofit. Some people will say, well, there's no return. Well, there is a return. It's your, again, consult a CPA on this, but it's a deduction for your taxes. So there is some sort of fiscal return. A step
Yeah.
above that is what you may be hinting at, Michelle, which is there's no tax deduction to make, but you will make 1, 2, 3% in these notes, which is kind of a fancy word for a bond. But
Mm-hmm.
so you're not getting tax deduction. You're now entering the point where you're getting a small return Some people are okay, with taking a small weighting,
Right.
knowing that we're going to get something back.
Right.
It may not be 20% like Apple's annualized return, but
Yeah.
yeah. And they're not shifting 10% of their worth into something like that, but they're asking about it. And it's become a weekly question to me.
Interesting. Yeah.
Yeah.
Very cool. Well, it's the type of it's the type of person you're attracting into your
Yeah.
business too. So it
Yeah.
speaks to
It will become a separate asset class. And I'm not like, if all the Morgan Stanley and Merrill Lynch folk are listening right now, you have alternatives like real estate or gold or whatever it might be. But there, in my opinion, there will be a separate asset class that'll be on your Morningstar return, your quarterly report underneath U.S. large cap stock, real estate. You'll see impact investing.
hmm.
You can count me on that because I see the interest out here. We are in, crazy California, but there are funny things that come out of this world out here.
Mm-hmm.
And I can see that there's people saying, why don't you have that listed as a separate asset class?
Hmm.
Because they want to
Interesting.
see that differentiating.
Yeah. Yeah, very interesting. Oh, I love that we're learning new terminology here that we're going to
Yeah.
start. Of course, now that, we hear it, we will see it everywhere. So that's good. We'll
Yeah.
know what we're talking about.
Yeah.
So the title of the book,
Mm.
who are these clowns that are
Yeah.
talking about?
And I'm not one to point the finger. And I didn't mean to do that. The title came up, I had a book coach as I went through this process of writing a book, which I've learned so much about being a self-published author, but having a publisher help me with everything and a book coach. So don't feed the clowns, because I'll go out and have coffee or a beer with friends and clients, and you get me talking about like, oh, you should have seen what came to my office this last week. I had a client who got charged 2% on a commission, and they sold $50,000 worth of Apple stock, and in their statement they saw $1,000 commission. And they give it to me. These are not my clients. They become my clients because of situations like this.
Yeah.
Those are the clowns. Like
Mm.
in this day and age, and didn't happen 5, 10 years ago. This is like as of a year ago.
Hmm.
And I have a couple nasty stories, and I know enough to be dangerous because I've been in their seats. I've sat at a bank, years
Right.
ago when I was in my 20s, and we used to sell these proprietary funds, and a lot of the banks got in trouble for it. But we were just offering the one fund family that the bank owned, and so
Mm. Mm.
you'll have to read the book. But I refer to these clowns because it being in this business, I get looped into this world, and maybe it was selfish of me, but really I want to let people know that there are some good eggs
Mm-hmm.
in
Mm-hmm.
this finance world. There's not, you got to just know what to look for. And I really divulged everything in this book about, like, if you walk into a bank, that's fine if you want to do business with them. This is what I saw. And, the attorney I used, he's like, you're kind of balancing on libel. He had to read the whole book and go make sure. And I go, well, what does that mean? He goes, I think you're okay, but you got to be. But I was just, all it is the truth. And I told him, I'm
Yeah.
telling the truth. It's not like I'm telling weird stories. This is like real stuff
Right.
that I'm saying. Those are the
Well,
clowns.
I still think, despite all the advice to make sure that, your advisor is a fiduciary and I don't know, I remember when Tony Robbins came out with that monster money book, and it was
Yeah.
basically somewhere in there was all about the fees and the unknown cost.
Okay.
But the book was so giant, it was very hard to understand.
Yeah.
But no offense to Tony.
Yeah.
It was
And I'm
it
not
was a great
against fees,
effort.
Michelle.
But what
Not
was
to
that?
interrupt you. I'm not against fees. We all have to make a living.
Right.
Even mutual funds and ETFs, they all charge something. People say,
Right.
oh, they should charge nothing. And I'm a capitalist. I've gone to multiple colleges and have bills to pay. But, I think mutual fund families have to watch their fees because people in my business have to make sure the fees stay low for our clients. And that's a whole separate book there. But I'm not against fees. I am against people going to the carnival, as I refer to the clowns, and being some of the games you just don't play in the carnival
Yeah.
because
Yeah.
you're not going to, those are the people who are, And
So
I grew up in
interesting.
Atlantic City
So
on the
that
boardwalk.
those are in the book for people to read and
Yeah,
like,
yeah, yeah.
yeah.
Because I break down like what's the brokerage house and why are they different and what's a bank and what are the insurance companies? Why are they selling you these things? And
Mm-hmm.
because I
Mm-hmm.
was on the, I saw it. I saw the commissions I was getting selling annuities. And again, I'm
Mm-hmm.
not saying annuities are bad, but when you have a client who has $1 million and $800,000 of their million is in an annuity, they didn't know what the commission was. And, it's people like me that tell them. And if
Hmm.
you have an annuity, that's great, but how can it be 80% of your, I mean, that person who sold them that should be questioned. And that's me. And I'll be blunt and honest. Life's too short, but that's just,
Yeah. Well, that's
sorry.
interesting to me too, because I know very little about annuities, and I know taking care of my parents. I keep talking about it all the time, but I find myself dealing with my dad's annuity, and um, what does happen there? I'm not very well versed on it.
Yeah. Well, there's multiple types of different kinds of annuities, first of all. So you'd have to
Hmm.
get the statement and see what it
Yeah.
is,
Yeah.
and there's surrender values.
Yeah.
And again, is there bad stuff about mutual funds? Sure. I mean,
Yeah.
I'm not here to point the finger, as I always say, but I feel like it's important for people to realize, like, do you know that that person who sold $100,000 annuity just made $7,000? Like,
Hmm.
well,
Yeah.
how can an insurance company pay somebody $7,000 to sell a product? And it's because of the fact that they do make money in
Yeah.
other ways,
Yeah.
and and there's huge surrender. I have people who've been in an annuity for a year or two, and they want to get out. You're going to have to pay, again, six or
Yeah.
7% to get out of it. It's just like that. It
Yeah.
doesn't make any sense to me. But a
Yeah.
little annuity, again, percentage fiduciary if it's a small position, and not here. I don't want to talk about annuities the whole time,
Yeah.
but
Yeah. Yeah. Yeah,
yeah,
there's just a lot of interesting things, and I guess it sounds like part of the point of your book is just to open people's eyes so that you know what to look at and the questions to ask and all the
that
things so that
that's it. And
yeah.
it guides people. I mean, to get not to get into the book, but and I use humor and weird stories, and
We love weird
it's fun.
stories.
It's fun to see the Amazon reviews come in from people I don't even, they're like, this guy's quirky and wild, but that's nice. That's what I wanted. I didn't want it to be a bland
Yeah,
book.
yeah.
So
No, that's we don't need another bland money book, so I think that's great.
yeah.
Um, you refer to investing as being just like sex. What do you mean here? I'm picking up on those
I
questions.
was hoping you were going to ask that question, but no,
How can I resist that? Don't put it on the list if it's too
absolutely.
tempting.
Well, there's a few reasons that one popped into the chapter. I mean, the book coach was like, I'm not sure. And then I love Anthony Bourdain, who
Yeah.
rest in peace. Anthony, one of the, just a great, if you watch his shows and read some of his books, Kitchen Confidential was a book I read years ago and it just opened my eyes. Had nothing to do with investing, but it had to do with being honest and being a good person. And,
Mm.
I don't know, I didn't know him personally and I know he had issues, but when you read how he writes, he has a chapter, food is just like sex. And I know food is not the same thing as investing, but I was like, you know what? If good old Tony can write about this, then why can't good old Dale write about it? So all I refer to that chapter, that was sort of just to catch people. It goes into risk profile,
Uh,
and any investment person knows that before somebody comes in my office, we'll talk about sustainable investing. But really, once they once they're a client, we don't need, the first thing we tackle is their risk profile.
mhm.
How risque are they? I was trying to use these silly words that are sexual related just to catch people's eyes, but because people don't know, they're like, I don't even know what you're referring to when it comes to a risk profile,
Yeah.
right? And
Hmm.
so let's not even get into sustainability. I tell them we'll do that in 10 minutes. For the first 10 minutes, we literally have to um, I keep wanting to use sexy words for this, but I won't. But you really have to know, like, how are you allocated? People come to me with Morgan Stanley statements they don't know, and it's not to the fault of a Morgan Stanley rep. It's because they just don't know how they're weighted,
Hmm.
and that's huge. You need to
Mm.
know, how much do you have in international stocks? I have no clue. Like, if it was
Yeah.
my money and I wasn't in this business, I would at least want to know how I'm weighted in just 5 or 6 major asset classes because it has a lot to do with how, I mean, this market is wild. And
Hmm.
so, yeah,
Yeah.
the investing is just like sex. How risque are you under the sheets? You might have a good idea. Well, you may want to know how risque you are when it comes to your brokerage account. That's all.
Yeah. Yeah. No, it's interesting, and it's interesting that you bring up that because everybody does ask that question about your risk tolerance, and really you don't know. And then you start, people start asking you these questions, and you kind of want to just walk the middle line because you don't really know enough to be very educated on answering
Yeah.
that.
Those words passive and active, again, in this chapter, I refer like you may be passive when it comes to like, the first date, or you may be very active. Again, I was trying to be silly with it. Um, the book coaching, she was just like, you're kind of crazy. And I was like, no, let's just keep it in there. But, passive investing is like, hey, I'm just going to put it in the S&P 500. And I know people that do that. And they may say that they're sustainably minded people and drive electric cars, but then they say all they own is SPY. Well, I almost don't even want to talk to them because, and this leads to sustainable investing because you're not helping. You're just buying SPY, and I can show you, the ESG scores of some of these funds like Vanguard,
Oh.
and that's a passive way to invest, and you're not helping in terms of the environment. And then a more active investor is like, hey, we can buy mutual funds that are strictly sustainable and have been, or we can actually buy individual stock positions, which I'll do for clients because they want to really see what they own. They want to be very active with how they're approaching.
And you are able to give them the information about the kind of the, excuse me, the standing of these different companies. That's part of.
Absolutely. Yeah, it's really easy. I mean, you have to pay for the information as a firm, and there's definitely a few programs that I use out there. But it's amazing. I can literally now I have meetings all week coming up, and I can just put in I can link the Schwab holdings that I use Charles Schwab as my custodian. I am an independent advisor. I'm not promoting Schwab, but I have to have a third party custodian for my clients to custody assets. But I can show them, in fact, this meeting with a great local person tomorrow, I'll be able to show her when it comes to climate change and global warming, which again, I'm not here to hug trees and stuff like that, but it can show how all your holdings rank versus whether it's the S&P, the Dow, or the NASDAQ. You can actually, or any fund, you can see how you rank in comparison. It actually gets down, and not to get nerdy here, but one of my clients, this is in East Bay, Berkeley client, they really are advocates of equality, right? Okay. Which that's great. Like if that's their value, they want to have the highest score possible when it comes to value. Right. Again, within proper investing and risk profile, I can see how their scores, and we can see out of their 120 holdings or whatever it is, what are the 10 worst holdings when it comes to equality? We're talking women on the board, women executives. And she can give me the option to say, hey, do you think we can sell these bottom 10 scoring funds or stocks based upon my value of this being so high?
Wow.
But it is my job to guide her and say, you know what, probably shouldn't sell that position. Could be tax reasons. It could be, it could be just asset allocation reasons, but at least she has that data to see how transparent it is.
That's super interesting. I wasn't even thinking about things like that.
Yeah.
So what are some of the other metrics, for example, for an environmental kind of profile? What are you looking
at? I'm not going to turn my computer around, but there's all sorts of paperwork on the ground because this is what I do all day. And I know there's a list down here somewhere, but there's like water scarcity, water conservation. Like you could say, hey, I love big tech, right? I want to own 20 of the biggest tech publicly traded companies out there.
Right.
But gosh, like I'm a water conservationist, maybe there was something near and dear. We can find the least performing tech companies when it comes to that one specific value. I mean, that's pretty specific, but there's tons and there's hundreds that go into it, at least hundreds.
Wow.
So, but it's fun. And it's making my job a little harder, Michelle, right? Because in the old days, there was just funds that were doing it. And you would say, hey, let's buy a Parnassus fund because they're great. But now it's like there's so much data out there that we've all become experts, even though my clients, a lot of them they're experts in other stuff, but the data is out there. So it's my job to kind of help guide with the data.
Well, that brings up another point where, for the average person, you're probably not going to have the time or the expertise to go through that kind of data yourself. I mean, it just is my guess. I mean,
totally. It's funny as in this business, people just don't have the time, nor do they even want to do it. And so when they find somebody like me, and there are other sustainably minded independent investment advisors out there, it's just once they realize like, okay, this is what you charge, this is where you're heading. Somebody, my brother-in-law told me about you. It just becomes sort of, nobody wants to. If I wasn't in this business, I'd be hiring me to do this
Yeah.
if I was a country singer, like I
When
want to
you're a
do.
country singer.
That's right. When I am, I'm going to hire myself or somebody like me to do it. But yeah, there's so much being thrown at them now, and there's like Robinhood, and there's all these different websites, and you can go
Yeah.
on Goldman Sachs's website, and they have a sustainable thing
Ah,
going on now, and it's just I just feel bad for the investors because but I always tell clients like this is why I've aged so much in the
yeah.
past like 10 years and anybody who runs an investment firm, but people are relinquishing. And again, I'm not here to promote my business, although everybody always promoting themselves in some way, but
Right.
um, people are relinquishing the stress of dealing with it.
Mm-hmm.
And that's what we signed up for, all of us in this business. But
Well,
yeah,
I think it's super important because otherwise people just avoid doing it altogether and then you lose time. And, I mean, I've talked to so many people who, well, when I have time to really learn something about investing, then I will. And when I have time to research all these, and it doesn't happen.
no,
So,
happens so often. I'm so glad you said that. So many people, and I've seen them locally at the coffee shop, like, oh, I've been sitting in cash.
yeah.
These are the people, and I'm not. This is horrible. I always say life's too fast. You got to let people know. These are the people that are complaining with the ups and downs of the markets, and so they pull out at the worst time,
Yep.
and then they sit in cash for 3 years. I'm
Mm-hmm.
not kidding, and I've seen it. I might have mentioned this in the book, but it's one of my big pet peeves. They're the ones kind of poo-pooing the market, but
Yeah.
it's because of the fact that they're getting out at the wrong time, and then they don't go back in. And then if you miss 2 or 3 years of like in this market, and if you look at a 10-year chart, whether it's sustainable or not, you, there's a reason real estate costs what it does today. And there's a reason that yoga pants cost $140. I'm not buying, say, I know Lululemon stock,
Yeah.
although they now have men's clothing, but there's a reason things like are costing $140 that used to cost 80. And it's because of the fact that one of the reasons is this 10-year stock market it's been a run. And
Mm-hmm.
if you miss 2 or 3 years because you were nervous during COVID, it's going to be hard. You can get back in, but remember, market goes up and market goes down. So be ready we already witnessed last year, which was a negative 18% in the stock
Right.
market, but that doesn't make up for every year that was up 25 or 30% in
Yeah,
the two in
yeah,
the last 10 years.
that's very, very tricky. And you're right. I mean, it seems like it's pretty common knowledge that, you shouldn't overreact to those downturns and things, but we just operate, as I always say, emotionally with money.
Yeah.
I mean, it's
Yeah.
that kind of a relationship. So it's
Yeah.
really good if you have somebody like an advisor who is calming you down and telling you what to do in that case
Yeah.
sometimes.
Which is what I do. But there's always a handful that are like, I'm getting out. And
Yeah.
it's easy to get out. It's the hard part, as everybody is, they wait and I touch base and then, and not, when I mentioned this, it might have been one or two people that did something like this during COVID, but it sticks in your brain because you feel bad. Like, why did they do that? And, and
Hmm.
then you don't know when to go back in. Like this market's been great this year so
Yeah.
far, right?
Yeah. You really don't.
And so if you pull out now, like who's to say that it's not going to, somebody just mentioned the roaring 20s again. We're about to enter them, like the 18% negative last year. Sorry, you're getting me on my market chat, but this could be a whole new era for the next 5 to 7 years of robotics and all these big corporations becoming much more efficient and making more money. And so,
Mhm.
who knows? The roaring 20s. It would be fun to have a big party
It
after
would.
COVID and everything.
We could use a big party. It's been kind of
Yeah, we could.
I don't know.
Ah,
Yeah, it's been a lot of roaring, but not in a good way. Um,
yeah, that's right.
so let's talk about this robot kind of idea. I know in your book you talk about robo advisors. I'm not sure
Mhm.
people know that much about that.
No, yeah. They sort of came quickly to the scene a few years ago, and they were kind of all the rave, especially with some of the whippersnapper tech firms who were, and they're still out there though. They're still gathering billions in assets. So a robo-advisor, I could tell you a funny part of the book, which maybe I will, but a robo-advisor is for people who maybe are first getting into investing, who are okay not speaking with a human like Dale. And you go through a risk profile questionnaire, but you then are put into certain ETF. Like I have a robo-advisor. It's like a subsidiary of my firm. It's called Sustainfolio. And it's really like, I'll give you an example. Younger clients are like, hey, Dale, I have $15,000 to my name, somebody that's 24 years old. And they're like, do I need to hire you? And I'm like, well, my minimum's not 15,000, but I do have a robo-advisor where the minimum is 5,000. And it's a great place to kind of you don't have to do anything. It'll rebalance for you. The advisor doesn't, I manage the ETFs that are in there and I can change them up. I don't do it very often for tax reasons, but I can definitely, if there's a fund that has a poor ESG score 2 years later, I may consider bumping it out of that list of 15 different funds. But I guess the point is, and this is such a big discussion, Michelle, like I did it because if we are entering a robotic world, it's important to kind of, regardless of what industry you're in, maybe maybe this is where the 20 somethings are going to be in 20 years. They're going to be just doing everything online and not through a human. My business has not slowed down. My non-robotic business is still growing.
Yeah.
So everybody's different, but there's a real funny chapter. It's kind of another perverse, strange chapter in the book, but I refer to robotics and, I start talking about the Terminator and the movie, but then I didn't realize this, but Japan ranks now, as far as birth rate, they rank like 222 out of 225 nations in the world.
Wow.
Their population is going to go from like 110 million to 80 million in the next 20 or 40 years. This is Japan. This isn't like, this is a very well-developed country. And the sexual robot world has entered Japan. And there's some crazy statistics I put in the book about like what percentage of 18 to 25-year-olds are virgins in Japan. And one of the big reasons is because of robotics entering their society. And I know it's silly. I'm not trying to make you buy the book, but it's stuff like that I talk about. It does lead eventually to robo-advisors in the business, but who knows? I don't know where we're going with all this. I don't know if you do, Michelle, but
no, it's, I just find this fascinating because I just saw, I was actually looking for, but I can't find it, a post on Instagram this morning that was from an esthetician, a slightly older woman who has been doing this forever. And it was something like, you can't buy on Amazon and be able to, talk about your upcoming event that you want to look good for. I mean, and then she went on to, Sephora and all the online ways that you could buy the products and things that she sells. But what you lose in not having a human connection around it. And lately, you just get bombarded with things. So all of a sudden I feel bombarded by this whole idea that we have all this, mental health crisis around us, partly as a result of disconnection and there sort of being no community. And, I've been listening to things that have been really pretty stunning about what neighborhoods and community used to be for people and how much it helped people in terms of their just sense of well-being and security and joy. And so now I'm a little bit more worried about everything going online like that. And I have young people. I have a 22 and a 25-year-old. So I see them being so resistant to talking to people like, and they're outgoing kids, but it's like, why would I talk to an advisor when I can go online and, learn it all on YouTube or whatever? And so I do think there's something very large that we're going to lose it's a good combination, but I don't feel like people should stop talking to advisors.
I agree. It's just, I totally hear you. The question, we don't know the answer to that. That's what's really scary. You just don't know. And the 20 somethings, and I have little kids that are a lot younger than 20 something. And we just don't know the answer to that because as much as we think, and I'm in the same boat because I'm still talking to clients. When we hang up, I'll have 3 emails and clients want to have coffee next week. And
Yeah.
that's still happening. But I definitely, yeah, the social issues I feel so bad for kids. Now they may feel bad for us.
They do. Yeah.
When we're older, when I'm in my 80s and they're going to be, whatever, like they may come back and say, how did you guys not have cell phones? Or how did you not have, this thing called the metaverse, which I do discuss in the book. And that's what's coming because they're already in it. And I hate to say this, but like there's Roblox, there's all these things where these tech companies, again, I could write another book if there's any publishers out there who read my book and want to forward me and say, what do you want to write next? The metaverse is coming. And I know people are like, you're crazy. And you'll talk to people who don't even know what that word means. And I see it, especially living in the Bay Area. They're smart. They're doing stuff. They're literally manipulating in a legal way, young people to be avatars in a world that that's what they're in. Everybody, I hope on the call realizes that the internet as we know it is not going to be the same in 20 years. We are going to be in it. Now you don't have to be in it all the time, but right now we go to our computer, there's a reason NVIDIA is up 100% year to date as a stock. And it's because they're the brains behind, you have to have the brains and the chips behind these things. Mm-hmm. But the internet and Mark Zuckerberg is no dummy. And the internet is, we're going to be in it. In 10 years, you and I, Michelle, you're going to be in it. You're not going to have to go. You can go to Paris if you want. You're going to get me on my soapbox here, but just weird California talk here. But right now we're not in the internet. We just go on our phones and look at it. But we'll eventually be like, hey, you want to go, guys, have coffee in the Louvre? You want to go to Paris this weekend just for an hour? And you literally will go with your best friends. You'll look just like you do now, but you'll be sitting down. Now you're going to have to drink coffee in your own house. And you're like, what are you talking about? Though? But this is where this is heading. And young kids, you're 20 somethings, my 9-year-old. It's this leads to investing, by the way. We don't want to get away. There's a reason that you have an advisor to kind of think about these things and say, oh, maybe Intuitive Surgical, which is a robotic healthcare company, that, that's who's going to be performing surgery. It's not going to be the UPenn grad. Which I'm sure they're still going to have a job because somebody's going to have to look at the robots and watch them. But your heart surgery is going to be done by a robot that's done it 10,000 times correctly every time. So that's what's so weird. Yeah, just blew your mind.
That was the term. I was just going to say that. You did blow my mind. You also kind of scared me a little.
Yeah, well,
and
we'll be able to live together. As humans and robots, we'll be able to work together, but it's going to be weird.
Yeah, no, it's fascinating. And of course, with the business you're in, you have to know about these things before the general population in a way, to help. This is where the future is, and investing is about, the future. So
it's themes. Yeah. Like remember, water scarcity is a theme. And my clients, most of them are invested in water infrastructure and small percentages, but you sort of lean into some of these themes. And that's what a good investment person should be doing, is saying, hey, sorry, noise outside, but robotic healthcare and like climate change, not that that's a theme, but which companies are addressing climate change as much as they should, So, and I could go, there's a lot of information about companies who have headquarters in Miami and all their, if there is a rise in sea level, and again, I'm not this wild tree hugging person, but there's statistics that show that certain companies all their servers are based in the highest flood zone in Charleston, South Carolina. And that's data that I'm getting that you may want to, something to consider. But,
super interesting. Yeah, I would want to sit down and have coffee with you if you were my investor or advisor
beer,
as well.
Or a whiskey.
Yeah. Well, I hate to stop because there's a lot of great topics here, but I'm excited to read your book. And can you tell people how to find the book, how to find you,
Yeah. Well, of course, my company is sustainvest.com. DaleWannen.com is where all the information about the book is. I am self-published, so it is on Amazon. I only bring that up because people are like, oh, I want to get it at a local bookstore. And it's as it's very difficult to get into bookstores if you're self-published. And then again, Amazon runs the world, so
Yeah.
that's why you have to go to Amazon to sell your book. But yeah, just go to my website and reach out to me. I'm very open, and if you email me, I'm quick to tell you how I feel about the world.
I love that. So if
Yeah,
people listening are just like intrigued and thinking, kind of like to have a conversation with you, that's something people can do.
yeah, no
Okay.
doubt. Yeah.
Okay.
They can't waste hours of my time, but definitely, no, I'm kidding. But 10 or 15 minutes just to shoot the breeze without a doubt. Yeah.
Okay. Okay.
Yeah.
Well, and yeah, I could ask a million more questions, but thank you
Yeah.
so much for coming on, and thank you, for bringing your book to the world. And I hope people will read it. It sounds really informative, and just more awareness and understanding around what is going on in the financial markets and just in the world of money just makes you that's a big part of having a better relationship, because when things are a
Yeah.
mystery, it's hard to have a good relationship in that circumstance.
Yeah.
So, well, Dale, really appreciate you spending your time and coming on here.
Yeah,
For
thanks, Michelle. That was fun. I think you read one question from our list, so we went off tangent, so that's great.
Yeah, no, I love the list actually. So I'll be looking for the answers as I read the book. It'll be a quiz for
Yeah.
myself.
Oh, good. There you go. There's like a quiz.
Yeah.
Thanks.
Okay. Well, again, thank you. And thank you, listeners, for being here. Love having you on the Money and You show. And you can find us where all the podcast platform or the Oh, goodness. I've talked too much. You can find us on all the podcast platforms that are out there, as well as the Limit Free Life YouTube channel and Roku and a few other fun places. So please listen in, give us a review, a like. My next money date course, learning how to date your money so that you can build that great relationship with it. That is coming up on June 6th. So you can reach out to me, Michelle at limitfreelife.com, if you have an interest in learning some fundamentals around money management, as well as really shifting your belief systems around money so that you can enjoy that relationship more. So that's our show for today. We'll look forward to seeing you next week. And don't forget to work on your relationship with money all the time.